So welcome, guys. Nice to be with you here. We're going to talk about InsurTech, of course, and the way startup companies disrupting the insurance industry. So you have mics here. You're welcome to introduce yourself very quick to the audience here. So who wants to start?
EUGENE GREENBERG, co-founder, CEO, Insurnce insurance startup company. We deal with the insurance fraud. We are developing a multi-stack intelligence as a service platform that predicts insurance fraud.
NISSIM TAPIRO, co-founder of Next Insurance. We develop online insurance for small businesses.
ARAZI, a veteran of the insurance business for a long time, founder of FinTLV Ventures and FinTLV Innovation Zone.
And AMIT, I'm leading the Innovation Tech Terminal, the startup practice at Deloitte.
Thank you, guys. Okay, Gil, I want to start with you with a question. No worries. You know the answer. We want to ask, what are the main challenges for InsurTech startups when they're deploying their solutions in insurance companies? How do you see that from your point of view?
Okay. First of all, I think insurance is a business. And it's a business which is very complicated. And the insurers are very complicated for themselves. So they have a very complicated core systems, a very complicated products, distribution channels. And I think the first thing to know if you would like to have success as an InsurTech startup is to understand the business. And I think that startups that do not understand the business or come from the business, they will have a very big difficulties in success of the proof of concepts. This is the first thing. The second thing is that insurers are, they say they are very innovators, but they are not. And the process are taking a long, long time to move to POC and to start working on it. And sometimes startups doesn't have the time for it. So there are a lot of gaps that you need to minor. And I think the most important thing is to come from the industry and understand it.
Thank you. I fully agree with you. We see from our day-to-day work with Equitech that after mapping the needs of a financial institution, doesn't matter if it's an InsurTech or insurance company or not, after mapping the needs, making an efficient matchmaking, it's much easier that way. So I fully agree. Anybody has something to add on that?
I have to agree with you. And it has to come from the needs and from the demand side. And you know, there are hundreds of startups, but if on the demand side, there will not be a willing to start working with the startup in real manners and serious manners, it will never succeed.
I fully agree.
Yes. I would add, I completely agree with Gil. One of the biggest problems that insurance company does not speak technology. Probably they won't be speaking technology in 5 to 6 years. And the biggest problem to do something with insurance company, you need to be a domain expert. You need to fully understand the needs of insurance company. The bigger insurance company, bigger issues. Multiple departments, corporate wars. Sometimes one department wants your solution and it's controversial with another department. Each solution to implement an insurance company, you need to stitch between 20 and 30 people inside of insurance company, going from up to down. So that, of course, makes startup hard time.
Thank you. I agree. Top-down and bottom-up mapping of needs is definitely efficient for implementation process. Thank you very much, guys, for this. And maybe, Amit, from your point of view, is a global facilitator of fintech integrations, also in insurance companies. What do you think are the key success factors for successful implementations? How do you see that?
So I think it all comes down to building the right muscles. And I totally agree with what Gil said. They think the insurance companies that they are innovative. And some of them are calling themselves right now, we're a tech company that does insurance, right? Well, that's BS. Yes. They are an organization that is usually around 100 years, the young ones. And they've doing the same for many, many, many years, and they understand that something is being disrupted. And we have, by the way, a living example with EUGENE and AXA, exactly how those interactions are trying to be created. But when it comes to it, you need to understand, and if we're using the metaphor of a body, that in order to be a successful company or entrepreneur, you need to have the tech side and the business side. In Israel, we're excellent in the tech side. We're really, really buffed. The business side, understanding where they're coming from, it's the tough part for us. And I think the main challenge and the main opportunity is to define the issue. Because we like to say that in Israel, it's not about FinTech or InsurTech. It's about tech for finance and tech for insurance. It's that hammer looking for a nail. And this is where we're good at. We're good at taking technologies, really hardcore technologies, and trying to implement them on different applications until you find the right one. And you need to understand when financial organization, insurance and banks and other type of fintechs, financial organizations, when they're trying to interact with startups, in Silicon Valley, they're knocking on the door and no one answers because they're trying to disrupt the business. Lemonade, for example. In Israel, our path to success as entrepreneurs is to collaborate and not to go against. Now, that's the opportunity. And when you think about tech for finance, by the way, both for the back end and for the front end, and we'll touch that soon, I guess, it is about taking the current business model and doing it faster, smarter, cheaper, and basically take every notion of their business side, current business side, and take that. Because if you speak with them about technology, you lose them. You need to speak with the business side about business challenges and how today you're solving pains and how in 5 years you are creating new business opportunities.
First of all, I completely agree with Amit, and I would like to add a few more sentences. We meet dozens of InsurTech startups, and when we meet them, we immediately understand they do not understand the business, and their solution will never work for insurance company. Not in the IT side or in the architecture of an insurance company, which is spaghetti, and not even on the business side. And it takes to meet tens of solutions until you find a right one that you will have the ability to make it work. And I think this is part of the problem. And the second part of the problem, I think NISSIM will add, because NISSIM is a disruption side. Yeah?
Right.
And
we'll get to it.
it's not on the insurance company's side. And I think it will be very interesting to hear your point of view.
Thank you, Gil.
Sure. So in many aspects, indeed, technology can change a lot of the back end and change really the way this industry works. But I think one of the major things that the current insurance company misses is that the market is changing as well. The clients are changing. They expect things immediate. They expect things that totally match their needs. And these are things that traditional insurance companies have a hard time to supply. So I think a lot of innovation goes to that spot of building an insurance product that really tailored towards the need of the consumer. It meets him online, where the new generation is more convenient doing stuff, and it works instantly, meaning the services give immediate response to the user. They can go and complete all the processes of the insurance online, whether it's purchasing insurance or submitting a claim. These are all processes that in today's insurance industry takes a lot of time with a lot of paperwork These are things that are not accepted. And this is where the disruption can come and influence.
Thank you, Nissim. And this is interesting to see. Actually, we see many InsurTech solutions that are engaging, as Amit said, B2B, and mainly the B2B side, especially from Israel, by the way. We see that, in general, the Israeli fintech industry is mainly B2B industry and not a disruptive industry. And I wanted to ask you, as a follow-up question, Nissim, to this, how did the distribution change for digital marketing? How do you market today to millennials insurance products?
So first, we need to understand that many millennials are becoming self-employed. We get many innovation around turning people into entrepreneurs by themselves, self-employed rather than go and work for somebody else. You see that in Uber and other initiatives that change the market. So these people have needs and more complex needs than the regular worker, and part of these needs are around insurance. So that's part of what we addressed at Next Insurance. Another thing is where we meet the customers. You need to be more sophisticated in meeting the customer in all the platforms, whether it's social platforms, online platforms, and addressing them not by hard sell like a TV ad that push the brand into their face, but in a more meaningful way, a way that will give them more value, more interest, and build the engagement with the customer through a process and not just push in their face.
Just to add to that, you need to understand that we're now going into a market as consumers of mass niche, meaning that we are very divided into different groups, and each group requires different solutions. So Next will hopefully be very successful, and Lemonade and others, but it will not be 70% of us using Lemonade. It will be a niche that uses exactly that, and it's big enough, by the way, to leverage that. So you need to understand exactly what are the right channels to your target audience. We just saw a very interesting piece about insurance for pets. In the US, they spend around $10,000 a year on pets going to the vet. So just think about insurance for that specific market in specific cities. That's enough for a company, that's enough, even might be for a unicorn. So think about the right channels to your right audience, and then think about how to reach them.
Agreed, but the next stage of insurance is going to be microinsurance, and it's going to be a huge market. And if we take, for example, Bima, that has 30 million clients already, and if we take, for example, startups that, for example, give you an insurance, life insurance for the period of time that you're on a flight. Okay, all these microinsurances, or TRO, for example, which is micro on-demand insurance, all these microinsurances are going to be a huge amount of share of the insurance business because of the millennials and the spread of mobile and the submit generation and all of this.
Thank you.
I would say microinsurance trend will be if it's going to be profitable. I think TROV is real disruptors. We met Scott Walchuk just a couple of weeks ago in Amsterdam. He's an amazing guy, great idea, but in the end, it all comes to money. Today, Munich Re or AXA is backing them up. If the business will be good, it's a distribution business. Insurance, it's not a charity, okay? In the end, you need to make money. So if the loss ratio will be good, then the businesses will live. If the business won't make money for insurance company, nobody gonna back up these companies. Same for a new generation of insurance company. Don't make a mistake. The traditional insurance company, they don't go nowhere. They will stay. It's a huge corporations with the billions of dollars, with a very strong lobbies, And the new generation of companies like Lemonade, for example, they will take a certain, as you said, correct, certain part of the business. But let's not overestimate the changes that will be in the insurance market in the 5 years. Maybe the changes will be in the 10 years, not in the very short period of time. I believe the new generation of insurance company will raise, will be more Lemonades, will be more Next, will, I hope everybody will succeed, but in the end, insurance company pays claims. In the end, they need to make money.
I actually have a slightly different opinion. I think that when you look at the insurance industry today, it's broken in so many ways, and it wastes so much money out of the premium that they collect from the user, that there is a vast amount of potential to go and disrupt the market. So Trove, maybe if you look at it in the traditional insurance eyes, it doesn't make sense, but the traditional insurance also pays 20% of the policy to IT and 20% to the agents, and all of these are going to go away and allow a much better and more targeted solution to the user.
Okay, my past 26 years I spent in insurance business, okay? And I want to tell you, Trove, it's amazing idea, amazing. First, we met Trove in Barcelona, I think a year ago. The problem is the microinsurance, claims management, and fraud management, it's very, very complicated. And if you make an insurance for a bicycle for $100, and then you're getting a claim for 100 loss ratio of this bicycle, which means this business is not going anywhere. It was 15 years ago when insurance companies were interested in distribution, they were paying hundreds of percents of commissions first year. Nobody were care about actuarial side of the business because everybody made money. Look at insurance company today, 97% loss ratio in P&C, according to AN, the recent risk study, and they want the business, they want clean business, as well as reinsurance company. Because if insurance companies lose money, Munich Re, Swiss Re, Gen Re, all of them loses money. So they want clean business. And clean business, not necessarily microinsurance.
But what I would like to say, Nissim, is to be lean in the insurance business is not so simple as you think. You have heavy regulation. At the end of each transaction with a client, you need a policy, and you need the core system to run this policy, and you need risk management, and you need all these algorithms of actuarial calculations, and you need all the time to have the reinsurers backing you, and this cannot be so lean as you imagine unless you specify in very slim slices of the pie, as Amit said.
And just to add to that, I'm going to tell you a secret. They know. And that's a big difference. Because, and we always use those numbers, that shock and awe effect is there. And that slogan that every CEO has right now, you better Uber yourself before you get Kodakized, or whatever you can do with the word Kodak, they know that. And because they know that, they are reaching out, and they are big whales. They have the money to spend to run innovation program, accelerator, a corporate VC, whatever, in order to find those, bring them in, and change. Because they know, 20 years ago, it took 20 years to become a unicorn, worth of $1 billion. Now it's 18 months. Once they understood that, not 10 years ago, certainly 2 or 3 years ago, and we see they're all here in Israel, and they're coming here because they can work with the ecosystem, they're making sure that they will not be the next one to get out.
Thanks, Amit. I want to ask you another question from your global point of view. How would you estimate the Israeli InsurTech vertical in the eyes of the world? What do you think that people think about us around the world?
So it's a tricky question. We are not that well famous in fintech as we think we are. There are much better ecosystems for that. It can be in New York, it can be in Singapore in some aspect, and of course in London. But because we're coming from the B2B, we have a very interesting opportunity, especially in the insurance, because insurance, they need to take platforms that, well, you implemented that are from the 70s, right? And they need to take it to the next generation, and this is where we do a lot of great technologies here in Israel. And I think one of the biggest opportunities for us in Israel is to define the markets, because how many entrepreneurs are in the room? If you can raise your hands. How many of you are thinking about the US as your primary market? All of them, or some of them at least. The US market is driven by regulation. When you think about innovation in insurance, it's all about Europe, right? And I think the opportunity is to go to what we seem as not the low-hanging fruit, but there actually are, which is start from London, although it's kind of occupied there. There is Berlin, there is Brussels, there is Singapore. There's a lot of ecosystem that we can operate in where are trying to reach those top-tier startups. Sometimes they knock on the door again, no one answers. We have the opportunity because there are big markets for us. The world is now basically becoming global and everybody speaks English. And that's, I think, the biggest opportunity for us. Just to add to that, of course, cyber. I can tell you that we're doing around 50 projects of bringing multinational clients a year here to meet, regardless of the theme, cyber is at least 50%. Everybody are terrified because one thing around cyber. We saw it from Target, we saw it in Sony. C-level suites are going home because of cyber incidents. And when you need to go digital and you need to expand yourself, you need to protect yourself from cyber. The question is how to take it to the business side.
I agree, thank you.
I agree, everything ends with cyber, but I think there are more opportunities in Israel than we think sometimes, because I think the direct InsurTech ecosystem in Israel is very small and tiny, but as we are working with a lot of insurers globally and reinsurers, and what we found as a big opportunity is our ability to locate startups in other verticals and transform them into InsurTech. And that includes data analytics and cyber and automotive industry, and I can give you a lot of examples of proof of concepts we are running with corporates globally from another verticals that we transform them into InsurTech. I think it's a very big opportunity.
Thank you, guys. And talking about cyber, I want to ask you, Eugene, maybe I think it's your space. How do insurance companies prevent cyber attacks and frauds? Can you elaborate?
Cyber is not our domain expertise. Fraud is definitely yes. One of the biggest problems of insurance companies is insurance fraud. Nobody can estimate the real amount. If you take Munich Re, Swiss Re, they're talking about 15%. If I'm quoting one of the chief claims officers of one of the biggest insurance company in Israel, he said 90% of car insurance having a fraudulent behavior, 90, which means out of 100 claims, 90 having a fraud, getting back to Trove and all fraudulent activity. The problem of insurance company today that stays in data. Tons of data, zero knowledge, 85% of the data unstructured, unable to process, analyze all these tons of papers. Modern solution that insurance company using today designed for point of sale, point of claim. Point of claim, well, it's already happened. It's exactly like installing sprinklers in house that's been already on fire. Fraud is a moving target. And if you see the fraud from this perspective, you understand that just running machine learning on set of rules doesn't do the job, because what's happening, you're coming to insurance company, you're saying, give me a balance of your claims, just show me where is fraud, where is not fraud. Fraud, not fraud, fraud, not fraud, then you build the set of rules running. which means you learn your system to save hostages from the bus. Bus. What's going to happen if it's going to be a train? What is going to happen if it's a flying bus? What is if a convertible bus or it's a plane? We're using an expert-driven approach that differs of data-driven. We're not trying to disrupt insurance companies, but we're trying to give them additional value, make them more money, and we believe that to give an efficient fraud predictive models, you need to be, first of all, at point of sale, you need to be expert-driven approach, you need to understand three things out of each person that's trying to buy insurance. Does it have incentive? Does it have ability? And does it have the knowledge to perform a fraud? And if you can stop them there, then you're stopping from being a possible fraudulent engagement in the insurance company.
Thank you very much. We need to wrap it up, guys. But Gil, I want to ask you one last question. But you have an answer in like 10 words. Future of fintech, 10 words. In 10 years, what are we going to see?
Asia, huge market, very disrupted, mobile only, uninsured. It's going to be the next market of the insurance.
Can I say another continent starts with A? Africa. Africa, everything is mobile first. They're just emerging, they're understanding assets. And one key element for the cyber industry in Israel, coming back to fraud as well, cyber insurance. It's going to boom. And I think Israel is leading that and can even have another leap, and that's an area that I would look at.
Thank you very much, guys. Thank you, everybody.